Hello and welcome to another episode of Decentralounge, which is brought to you by Global Stake, your institutional, truly decentralized bare metal staking service provider. And today we're very excited to have a wonderful guest on the show, Umed Saidov. Umed is a CFA charter holder and the esteemed head of staking operations at Wave Digital Assets. Umed is a seasoned professional in the staking business, having managed operations of several hundred million in assets under stake. He's a thought leader in the Cardano ecosystem and played a pivotal role in the acquisition, management, and creation of the Cardano staking pool Skylight by Wave Digital. Umed's expertise and insights have been instrumental in driving forward the staking landscape. Umed, we're very excited to have you on today.
Jordan, thank you very much. I didn't know I had fans over at your neck of the woods, but it's great to be on your podcast.
Thank you. Yeah, thanks for having us. So before we get started, is there anything that you need to let us know in regards to kind of your personal opinions moving forward from the podcast?
Absolutely. So in this podcast, I just wanted to make a standard disclaimer that whatever I say in this podcast is I'm appearing in my personal capacity, and none of the opinions that I voiced here should be contributed or attributed to Wave Financial, or Wave Digital Assets. And anything that I say here should not be construed investment, financial, tax, or legal advice.
Perfect. Well, let's start with something fun and easy. I'm curious, what is your background? Like, what got you into traditional finance, and more specifically, what was that pivotal moment for you that transitioned into cryptocurrency digital assets, and what's led you to today?
That's a great question, Jordan. I basically, yes. I mean, my career, I spent about 15 years in traditional finance. I used to basically finance infrastructure projects all around the world with IFC and EBRD. These are institutions that help the developing countries build their commercial economic capacity overseas. At some point, I just decided that I wanted to move on with my life and do something else. I created my own wealth management company and managed some funds at that point, but it wasn't quite until 2017, I would say. Yeah, 2017 that well, first of all, I got exposed to Bitcoin watching a documentary. It was probably in 2013, and I kind of laughed it off. Being a banker, you basically look at these things with a skeptical eye. In 2017, I got into, I had a chance to take a second look, and that was just because one of my friends had a VIP ticket to a crypto event in New York, and I just went there just to see what it's all about, and that kind of got me hooked.
Nice. So then, out of curiosity, what are some challenges that you faced kind of in the early days of cryptocurrency, like 2017? Because that's the same time I was kind of exposed, but you seem to have entered it specifically from an institutional standpoint from the beginning. What were those early challenges via institution there, and then where you kind of are today?
So yeah, my idea was to basically give my clients exposure to crypto back in the day. And I had a lawyer and started talking to the lawyer, and the lawyer told me that, hey, Umed, if you want to go that route, I suggest you understand what cryptography is all about. And if you don't know what cryptography is all about, I suggest you close down your business and just dedicate yourself in this basically direction. It was a very good advice. I decided that I'm not gonna do the traditional wealth management at that point, and I'm just gonna dedicate myself to learn more about this new technology. And that was basically the best way to describe the hurdles early on, because the space was new. Everything was looked at from a skeptical point of view, with a skeptical eye, and including me. And until you get to a point where you start understanding the intricacies of the protocol and how Bitcoin works, how Ethereum works, and what's the cryptography behind it, you're basically are not comfortable with this space in general. It does require a little bit of homework to understand this space. So that was basically those are the challenges that I faced in the beginning.
Awesome, awesome. So then you've been a thought leader in Cardano. So for most institutional players that are just now entering the space, a lot of them are obviously struggling to grasp the multiple different cryptocurrencies. So most seem to keep it focused on Bitcoin and Ether, just based on the two largest market caps. But more specifically, my question would be, what led you to Cardano? What's kept you excited about that ecosystem? What keeps you coming back? And then how do you foresee, kind of Cardano versus the other major proof of stake assets going forward?
That's an excellent question, Jordan. I think my evolution of my thought when I was in exposed to this space was that, oh great, we have this cryptography that's, by the way, from the 50s and 60s, that has been used as public private private public key cryptography that is used in order to secure your wallets. And then you have the Bitcoin, where you can basically create a system of incentives that makes a network secure and decentralized, and then you can exchange value between the wallets. It was a great first intro to this space, but then I started thinking that you can't do much more with this, because the first layer of trust, which is I am converting my US dollars into digits on the blockchain, and I need to make sure that it's there, it's stable, it will never be hacked. And there's calculations that I went down the rabbit hole to understand what is the chance of a wallet being hacked, and I went through all these things. But then I started thinking, it has to be there has to be something more you could add on to it. It has to be the next evolution. And unfortunately, Bitcoin was kind of a already prepackaged deal, and they couldn't do anything else because of the way that the scripts work on the Bitcoin. And I kind of gravitated toward Ethereum, and I started reading Ethereum paper, which on it was a great idea, absolutely fantastic idea of like building smart contracts and things like that to leverage the blockchain, but it just didn't strike me as very well thought out sort of product, to be honest with you. And then I came across Cardano, and what gave me comfort was the fact that it was being built by cryptographers, world-renowned cryptographers working on a solution that would would create a proof of stake protocol that would have the same guarantees as Bitcoin, at least, and but would be much faster, much cheaper to run, and would unleash the new era of smart contracts that will be both secure and fast and scalable. So and in 2017, mind you, it was just basically a bunch of papers. That's how I started, and that gave me a lot of comfort in this product. Yes, I knew that there's this possibility of there's a lot of risks with the delivery, because one thing is writing a paper, the other thing is building that stuff. It's pretty difficult, but the fact that there was momentum behind it, there was IOG behind it, which was a nicely funded institution, or a player, and there were engineers working on it. The code was on GitHub, and you could see the updates, and that basically made me very, very interested in this project.
And just a quick follow-up question, Umed. This is interesting, this walk through history, because here at Decentral Lounge Global Stake, we started our infrastructure business as interoperability fans, starting off in the Polkadot ecosystem, because Gavin Wood, who was the CTO of Ethereum at the time, realized some of these same problems that you pointed out with Ethereum. Wasn't going to be able to scale. It was a product that did its thing, but beyond that, it was very limited. And then recently, we've seen sort of a broader adoption of the Polkadot SDK, including Charles Hoskinson recently talking about it with Cardano. Do you think that that's something because the technical shift, it seems like everybody in blockchain is using Rust as the base language, and I believe Cardano started off with Haskell. Do you think it was some of those technical hurdles that you were talking about with regard to somebody writing the code and trying to like implement it on paper versus the dev actually building the protocol? You feel like that there's a lot with this pivot now, or are you excited about them trying out the Polkadot SDK in the Cardano ecosystem?
I think there's a lot of a lot of cross pollination in the space, and that's a great thing, by the way. And that's what I love about the space is that the space, the crypto community basically innovates in different angles, and then everybody borrows from each other. And Polkadot being one of the prime examples of that. Um, it's a funny thing. I think it was in 2019. I went to a Cardano summit, and I was talking to the technical guys, the engineers, the Haskell engineers, and somebody mentioned that the 50% of the global Haskell talent was there in that venue, and it just basically gives you a scope of how it's a great language. It's an amazing functional. I really like the fact that we have functional programming, which is used in mission critical, tools and settings. The airplanes and rockets and whatnot. But there is a lack of talent globally to basically um, build something really fast. So it's a great way of building protocols that are stable, but if you want to expand it, maybe and if expand it really fast, maybe you have to be a little bit more open. And I really I like Rust too, because Rust is a you can have the using Rust, you can write the code that will probably mimic most of the functionalities of Haskell, but it's not slow, or you don't have the problem with the talent, for instance. So yeah, I mean, I don't rule out the possibility that the Polkadot SDK could become one of the ways to expand the monolithic structures in this space, and get them to basically talk to each other and all sorts of things.
From more of a broad perspective, and hopefully this question is even framed appropriately, but Cardano, Ethereum, Polkadot, Avalanche, Cosmos, et cetera, there's all these different perspectives on cryptocurrency, perspectives on DeFi, and different ways chains in this technology can be utilized. From a lot of the sources that I see out there, news publications, people seem to be kind of pushing this narrative of there's going to be a winner. There's going to be top two that'll be used long term. But there's almost a part of me that wonders if it's the opposite, and it's more, for a lack of a better analogy, almost like global currencies. There's different countries with their own currencies. Not trying to say it as money per se, but how do you foresee Cardano or even some of these assets going forward within the next decade? Do you think it'll lean more towards that narrative of there's only going to be a handful of winners, or do you think the further we go down the line, 10 plus years from now, that there'll actually be 100 plus actively used different cryptocurrencies all intertwined together?
That's a great question again, Jordan. I think it all depends on interoperability, right? So if you basically start thinking that all these chains, and it happens in the Ethereum EVM ecosystem, for instance, you can wrap coins and port them to another ecosystem, and whatever is EVM compatible, for instance, you could play with that. So if we, as an industry, basically agree upon a standard methodology to port assets from one chain to another, regardless of the architecture. For right now, for instance, EVM is easiest, but things like Thorchain, for instance, allow you to seamlessly, natively exchange tokens from one native environment to another native environment. So the bridges like that, which are decentralized, actually going to provide a seamless and also fast way of moving value. Once that becomes a standard, let's say, then I don't see any one chain ever basically bleeding everything, because this space is still new. There's still a lot of things to be done. Scaling is one of the biggest problems. We haven't had a breakthrough in a monolithic architecture that would actually solve a lot of problems. I mean, the closest thing that we have seen is Solana, and in my mind, there's still a lot of things that need to be proven in that architecture for it to become a quote unquote winner. So my idea of the future of this of this space is basically that there would be a lot more protocols doing different things, and if you want a fast cutting edge zk-SNARKs or whatever exposure to that technology and do fun things with that, you would move to a chain that actually actively is exploring that, and there would be bridges between protocols to make sure that happens. But I don't think it will be thousands, probably 100, maybe 200. It's all there's a limit on how many chains there could be in general, because it has to be the chain has to be maintained by people, engineers, and there's a cap on that.
Very true. Plus, I mean, there needs to be economics on the chain for it to even survive. So, great answer. Very well thought out. So, to kind of shift back towards the institutional landscape specifically, just from your perspective, working with institutions, what are some emerging trends in staking or even DeFi that people have been asking you, or that you think people should be aware of?
Yeah, I think there's a lot of things that are happening on the institutional side. DeFi is pretty big. I think driver of things. It was very prominent up until recently, when now that the treasury yields have gone up a little bit, things are getting a little bit more competitive. But back when the yields were down, you could get really good competitive lending rates or whatnot, yields on USD, for instance. And as long as you were open to take the risk of the protocol, let's say USDC or USDT, and whatever farming or DeFi applications you're putting your money into, you could make a good risk-adjusted returns, in my opinion. Again, this is my personal opinion on that. Things have gotten a little bit more competitive, but it's not still out of the picture. I think DeFi is going to grow. It's going to grow even further. I think that most of the growth is going to come. I'm hopeful again from emerging markets, because in the United States we have so many different kinds of products. Financial products are very easy to get in and out of. But imagine, like, living in a country that doesn't have a pension system. That's one of the biggest sort of applications, I think, in of blockchain technology or DeFi products, is to create a pension system that is completely out of the reach of let's say a government, and it's just independent. You imagine you are getting a salary, and you basically buy into a product that is a DeFi product that lives on the blockchain, that accumulates your funds and invests it according to a predefined algorithm, and then just gives you a pension when you retire. Something like this, I think, could be an amazing use case for technology and DeFi. Yeah.
No, it's fascinating. I was reading an article the other day. I mean, it goes along the same train of thought that you just had, where they were talking about a way of car insurance, housing insurance, really any type of insurance, that you could make some type of an asset that if you never have to take out a claim, it continues to grow with you. And then it's something that you can either will to your kids or sell to somebody, or like an open market. So fascinating the way that blockchains continue to shape things. So separately, staying on that train of thought, I had heard you mention somewhere in the past, I believe it was on another podcast, that staking is one of the most misunderstood spaces in the ecosystem. So kind of curious if you could elaborate that. Like, what are your thoughts around the importance of staking and the parallels it has with traditional finance private ledgers versus public ledgers on crypto?
Yeah, staking, it's one of the freely used and misused sort of terms in ecosystem in this ecosystem, basically. My idea of staking, and the way that I don't want to sound purist here, but staking originated from the proof of stake, where the coins are used as the source of randomness to select the next leader to basically produce a block. There are different variances of proof of stake, of course. For instance, Avalanche is leaderless, but the basic idea is that staking is something is a incentive mechanism to make sure that the network is secure. It has a distinct purpose, and there is distinct economics behind it in order to make sure that the chain lives. The chain just propagates itself and goes on, and the protocol basically executes on the decentralized network. Now, there are other ways staking is being used. You stake your coins in a DeFi or some other protocols, and then you get something. Those are completely different. Those are more closer to the financial products, whereas staking in its original sense is something that you have a resource, you allocate it to a protocol, and then you basically get rewarded for securing a network. It's basically the same thing as mining, except that you are using your coins as your miners. There are a lot of, if you want to go down the road of comparing it with mining, there's a lot of similarities and differences, and pros and cons. But the basic idea is that staking is, if you think about staking in its original format, it's the same thing as mining, and it shouldn't be construed as something other than that. Now, when it comes to ledger, there's a ledger. I think that the basic innovation of this space, which is very misunderstood, is not on creating some coins or creating an algorithm or whatnot, but disrupting the way that we record value. The way that Bitcoin has started doing it, and everybody else kind of replicated on a decentralized network, is that if you think about traditional finance, every corporation has its own ledger, and that ledger is private. And then the accountants sit there and calculate what's the revenue, what's the cost, and how all these things work. And then the auditors come in and they do sampling and then make sure that everything is right. And then when you ask the auditors, they have qualifications. Okay, well, we can qualify that we've done these things and that. But again, nobody gives you the definitive answer, which I think is what any investor would like to to have. When it comes to ledger and blockchain technology, you don't have ambiguity. Let's say that player A says that I have X number of dollars on in my account. It's easily verifiable. If you want to say, okay, and it could be used for collateral, for instance, right? Imagine if all the companies, and we're far away from it, by the way, because of the throughput, limitations. But imagine if all the companies actually were existed on the blockchain. It would be very easy for anybody to audit the financials of a company, because everything will be on the blockchain, and with a click of a button you would know how many units they sold, what's the cash position, what's the cash flow, and it would not require a quarter or a year of delay to basically get that financial picture. And I think this is one of the most misunderstood parts of crypto industry and blockchain industry. The second one I want to say, and go ahead and say that, is that there was this mantra, blockchain, not Bitcoin, kind of thing. And I think it was repeated over and over again. And I think nothing is further from the truth, because without the token that incentivizes the miners to actually create and secure a network, and on the Bitcoin side, and on let's say Cardano's side, it's another proof of stake coin, the ADA. These systems would not work. So the incentive schemes are very important. Getting them right is very important. So yeah, those would be my basically 2 cents here.
Very well thought out. Very well thought out. So the only follow-up question I have to this, because I know somebody's probably thinking it, would be from a company standpoint. When it comes to competition, I wouldn't want my competition to know that I'm purchasing from a certain manufacturer or supplier, or maybe give them kind of a heads up of maybe a future product I'm acquiring based on where I'm doing my purchases. How would you say combat that perspective in regards to a public blockchain with a public company utilizing it? Shouldn't there be some type of privacy?
No, you're right. I mean, this is one of the things that probably makes a lot of companies hesitant about this technology. I think they was it like shipping companies created a blockchain based you know container shipping container tracking services back in the day. I think it was built by IBM, but it was a consortium of shipping companies. I think it didn't go anywhere because nobody wanted, exactly for the same reasons, Jordan, you mentioned, because nobody wanted to like basically put their data on a blockchain. Now, to combat that, you have things like zk-SNARKs. ZK technology allows you to actually probe and get your answers for your questions without revealing the underlying information. Let's say, for instance, you could say, "Oh, without telling me who the supplier is, how many units did this company purchase?" Yeah, you can get that. You could get what's the value of those units. Things like that. So if built right, and if we put our collective minds into this technology and create it for our economies, I think all of those questions could be addressed with a combination of zk-SNARKs and public blockchain, and make it work. I think the hesitation that's coming from traditional from the traditional way of doing things is from the point of view of middleman and whoever has built. It has to do with the disruption of technology that would make a lot of players irrelevant, unfortunately. But at the same time, you cannot stop the progress of this technology. As I was saying, it's much easier to make turnkey solutions for countries that had nothing. It's like cell phones, right? The AT&Ts of the world had to grapple with the idea of like, what are we going to do with these lines if the cell phones come in? They had to kind of reinvent themselves. They had probably 10, 15 years to basically turn into wireless companies. But you imagine, you had zero coverage, zero cell phones, and then all of a sudden you have a device, and then you can just do things. You can make the same analogies with the financial instruments with countries that don't have anything, and that could probably leapfrog the ones that have, because the ones that have the infrastructure, by the way, that infrastructure is pretty expensive. All of these people that are sitting in the middle office, calculating things and making sure that everything is right, that probably there would be structural changes in the economy to basically release them and then find some other new jobs for them, which makes it a little bit difficult. So in that respect, if we actually put our collective minds and embrace this technology, it actually unleashes a lot of productivity and also transparency. I would dare say that it would reduce the amount of fraud, because if you think about fraud, right? Fraud requires private ledger, and then telling your competitors or your investors, it should take Madoff. It requires that you tell them that I'm making these returns, but I can't tell you because it's company secret, right? So those are the things that you have to kind of think about, and something like that couldn't happen in blockchain, because you would definitely know, at the very least you would know what the cash position of a hedge fund is, and what are the inflows and outflows and things like that, and then you could independently verify if the numbers that you're being given are actually correct or not.
Couldn't have said it better myself. Very well thought out answer. Great response. Umed, you've been a pleasure to have on the show today. I really appreciate it. For those of our guests that are listening, where can they follow you? Do you prefer LinkedIn? Can they follow you on Twitter or X, as they're saying nowadays? What's your preferred mechanism to interact with people? You are on mute, good sir.
Sorry, it happens. Professionally, I do interact with people on LinkedIn. On a personal level, I do have an account on X. It's a real side off. It's at real side off on X. But yeah, those would be the main avenues I'd be probably publicly visible.
Amazing. Thank you. Again, for those of you that are listening, if you'd like to learn more and follow Umed, please reach out to him on LinkedIn or on X. Umed, thank you again. Pleasure having you on the show. We appreciate it, and we hope you have a wonderful new year.
Yes, thank you so much.
Thank you so much, Jordan and Ryan. It was a pleasure.
Likewise.